Preston Narainsamy from Nedbank Private Wealth joins us now to pick up on the markets that were today. Thank you very much for your time this evening, Preston. And let's start with the global picture. We have seen some movements coming out of the United States in terms of the technology space there, as well as some commentary from the European Central Bank. What are your thoughts on that picture?
Yeah, so Rafiwa, last night US markets closed in the green. We actually had a good few days of green positive trade after 7 or 8 weeks of aggressive selling. But sadly, like you mentioned, as the day opened today, we had some of those results out from Snap, the social media company. So, of course, the earnings outlook doesn't look all that great. And some of the numbers from an advertising revenue perspective disappointed. And on the back of that, we saw US futures and the NASDAQ in particular come under quite a bit of pressure. Meta as well, it is trading 7% down pre-market. So the market not liking that at all. And, that filtered through to our local market. We did have some positives on the ECB front. So Madame Lagarde gave some commentary on the likelihood of a recession out of the Eurozone. And she says that's not their baseline case. So a little bit of positivity, but the market zoning into some of those technology share companies and that having the biggest impact today. From a local market perspective, Rafiwa, that kind of filtered through. Our banks held up pretty well at the start of trade, but as the day progressed, all of those gains were erased. There were pockets within our local market that actually held up pretty well. Like personal care, companies, the likes of Clicks, Dis-Chem, they held up pretty well, probably on the back of good results from Dis-Chem that came out yesterday. But other areas of our market did struggle quite a bit. Naspers and Prosus in particular, they were down around 6% each. So the selling in Tencent and those two companies continues. So not a pretty day on our market today. Rafiwa.
Not at all, Preston, but I think a little bit of a silver lining is what we're seeing with the Rand movements. That's remained a little bit more resilient than it's been against the US dollar. Very briefly, your thoughts on what's informing the strength that we're seeing over the last couple of days?
Yes, so Rafiwa, today's move was actually not Rand strength. It was rather dollar weakness. So there was nothing fundamental from a South African perspective that caused the Rand to strengthen. It was more, just some of those comments again that Madame Lagarde gave. Essentially, if a recession's off the cards in the Eurozone, we saw the Euro strengthen quite a bit against the dollar. So today's move was primarily dollar weakness. And as a result, we've seen that move in the currency today.
Let's get into some company updates out today. We had African Bank, that company putting in its results today that it's benefiting from increased loans that consumers are taking out. But overall, African Bank has actually got a good story to tell in terms of growth despite the current times, Preston.
Yeah, definitely, Rafiwa. I think it's nice to see the business, back in profits. And it looks as if that My World transactional banking is really gaining a lot of traction. So, they've almost grown, number of new accounts by 80% So 500,000 odd new accounts, from the prior reporting period to now. So some good progress there, Rafiwa. I guess one has to monitor the credit loss ratios when it comes to a business like this. For now, it seems fairly, contained at the 4% odd level, but we are entering into a rising interest rate environment, and defaults on loans are probably something we need to monitor, and it'll probably be what the market looks at over the medium term when it comes to this stock.
Absolutely. And then Delta Property Fund, this is an interesting one. So they've spoken about this turnaround strategy that they're saying is actually proving to be quite successful. But the company is really reeling under a debt pile that's about 10 times, I read earlier on, its actual market value. Preston, what is happening here?
Yeah, so Rafiwa, this is always a tricky one. This share is coming from 9 odd Rand a couple of years back to 50, 60 cents now. So, this business has always had a debt issue. They breached their covenants, a couple of years back. And that LTV, which is your loan to value ratio, it's hovering around that 57 odd % level. So they're forced to dispose of assets, which are currently underway. So, they'll dispose of assets, reduce some of that debt. So it's pretty messy at the moment. But I think what the market was really disappointed with, Rafiwa, is more the operational aspect overlaying all of this negativity as well. They're sitting with some of their properties here in Durban Central, in the CBD, with 30, 40 odd % vacancy levels. And the quality of those office properties are poor as well. You know, they B, C grade, properties. So it's a real concern. Deep negative reversions on new leases as well. So the market not liking the operational picture, not liking the debt story, no dividend as well, you can imagine, with the debt-laden balance sheet. So the share price was actually down 10 odd % today.